All right, looking at Binance here, BNB. So recently, nice bullish movement. Price is still below this moving average though, so technically it's still bearish. But just like all the other cryptos, they've been pushing up a little bit. But I can see here, looking at Binance, that there's a bit of it's pretty much at a liquidity, major liquidity area. So you can see price respected and rejected this area here, and then finally broke, retested here, sold off, and now is testing it again and selling off. So I do think with this recent bullish push up though, I do think it's going to break this area. So the immediate thoughts that I have are looking for a retrace. So if we pull price here, we can see that from here to here it has pulled back to 618 perfectly. So that's healthy. That's a normal perfect pullback. But the next segment from here to here has not pulled back. So it's currently pulling back now actually, and you can see it's already at the 50%, so it might get bought up there. But also I see this 618. I like this one a lot. If we create a little zone here and drag it across, you can see how many times price respected this area. So here, broke, tested with this candle, broke below. You can see tested here, big one here, finally broke here, and so now is retesting inside this zone. So I would like price to come down even a little bit more maybe, and then get bought up at this 618, and then be looking for the next leg up. So if we just extend this here, if we use our Fibonacci extension tool here, we'll see that the next area, like the next price leg after it pulls down here, is this 120, between 127.2 and 114 or 141.4. So, and if we draw a zone here and drag this across, you can see this is where price has been before, and there's a lot of liquidity in this area too. So, and it's right around $250. So price loves whole numbers, so 250 is huge. So that's where I'd be looking for price to go to if it breaks this area. So first things first, we'll clear this up. We'll leave those zones though. We'll get rid of this. So we're looking for price to come down, keep pulling down in here a little bit, and then reject this area, and then start making higher highs and higher lows and lower time frames. The 4-hour moving average here, hopefully that catches up, and then we can use that and as protection. So if we take a buy position, we can put our stops below this moving average, and that'll also protect us, because chances are price will not come below this moving average if it's consistently bullish still. And then, but once price hits this area, you drop it down to these lower time frames, 5-minute, 15-minute, and right now you can see there is bear structure, right? So lower lows, lower highs. And then eventually you want to see the opposite, and you can see prices below this 15-minute moving average as well. So ideally, once price gets lower into this zone, it starts creating higher highs, higher lows on lower time frames like the 5-minute and the 15-minute, and then it crosses over this moving average. So ideally the 15-minute and the 5-minute, especially the 5-minute moving average, once the price crosses over this 5-minute moving average upwards, once it's probably in the bottom of the zone, starts creating higher highs, then we know we're good to go. We're going to enter that long position. So now we got to figure out kind of where we can expect to go. So I mean, we talked about this zone up here, this $250 area, but it's quite a ways up. So as far as timelines goes, this usually moves about 17-18 bucks every week. It's already moved 20, so like that makes sense that it's selling off. And I mean, depending on how this week closes, like granted there's still over 4 days left, this weekly candle, I don't think it's going to create this big of a wick, so odds are it'll start pulling back up again, and then maybe close right below 227 ish. So, but if we're looking at it from a weekly perspective, oops, that's the wrong thing. We're looking for a buy somewhere in this area. We'll say 220. I like that for now, just for now. We'll see what price actually gets to, but for 220, and then targeting, we know price moves about $20 a week. So I mean, the bottom of this one's 25, so that might be a little much, but there's an area of liquidity here that I'd like to target. You can see at the bottom here. We could shoot for that, and that's right at about $20. So, you know, right at 240. So not 250 next week, but we'll shoot for 240. And this just depends on, I mean, this week, this trade could start early, it could start late. Like, this trade might not be any good till Sunday, but could also be, you know, good sooner. It just depends on how much this pulls down and if it decides to really start pulling back up. But, you know, keep your stop below any wicks that come through here, and like I said, keep it below the 4-hour moving average. You know, hopefully this catches up, and then we can put our stops below that, and then target this upper zone here. Ideally, price comes up. We're gonna use this. Ideally, price comes up, breaks this zone. We drag this here, breaks this zone, and then retests a little bit, and then targets this upper zone right here. So, but if that doesn't happen, let's say price is moving up, we buy it down here, price is moving up, it hits this area and starts producing wicks just like these ones, then you just close your position, right? If you double your money, great. You know, there's a 2 risk reward right there, so like that's perfect. I'd still be happy with that. But if it blows through this zone and there's no sign, you know, if you get a nice engulfing candle through this zone, let's say something like this, and it closes, you know, full body above this zone, then probably good to go. Just keep holding your trade, hold it all the way to this area here. And again, this can take a week, so we look at like Sunday to Sunday, which is this right here. Should be an entire week. And then yeah, so $20 with a range within a week, so that's all consistent. That's exactly what I would look for. You know, let price come down and find its support here. There's a lot of wicks here, so should get bought up right at around 220, and then be good to hold till 240. So, and then maybe stop at like 215. So just to be really technical, that'd be kind of what I'd be looking for. 220 and 240, something like that. You get a 4 risk reward, so I mean that's fantastic. High probability because you're going with the momentum here. So just keep in mind that it is overall long term is still below this moving average. So I mean technically kind of counter trend trading, but we do have bullish structure taking place here. So as long as you know, you can definitely get from here to this zone, I think, and then if not, a little bit further to this 240. So that is my take on Binance here. So let me know what you guys think in the comments, and I'll see you in the next one.